Hello, everyone, and thank you all for joining us during the Lytham Partners Fall 2024 Investor Conference. My name is Adam Lowensteiner, Vice President of Lytham Partners. Before we begin the formal discussion, for those not familiar, Lytham Partners is one of the country's leading investor relations firms. With more than 2 decades of corporate access experience, we have built one of the industry's most diverse and effective platforms for connecting small cap companies with high quality and focused institutional investors while creating a framework of best practices in all aspects of investor relations. Today's discussion is hopefully yet another example where you can bring value to multiple constituents. To learn more about Lytham Partners and the investor relations programs we can provide, feel free to access our website at www.lythampartners.com. For this Analyst Insights discussion, we welcome Alan Klee of Maxim Group. Alan is Managing Director, Senior Equity Research Analyst at Maxim Group, covering TMT, Tech, Telecom, Media, and healthcare technology as well. Prior to joining Maxim, Alan was Managing Director and Equity Analyst covering TMT at National Securities Corporation. Prior sell-side experience includes working at Maxim Group as Senior Vice President of Equity Research and at Sidoti & Company as a Senior Equity Analyst, covering also TMT. Other experience includes buy-side roles as a prop trader at Xanthus Capital, Equity Analyst at both Casey Capital and Sigma Capital, and as a portfolio manager for small and mid-cap mutual funds at both First Investors Corporation and as a portfolio manager as well as at Guardian Life Insurance. Prior to that, Alan was a senior credit analyst at both Guardian Life and Moody's Investor Services. Alan also has his MBA in finance from the NYU Stern School of Business, has a BS from Rutgers University with a double major in biomathematics and economics, and he also holds the CFA designation. Hi, Alan, and welcome to the discussion.
Thank you.
So maybe to kick things off, I know I just gave everyone a little bit of a bio there, but maybe in your own words, tell us a little bit about yourself and what industry coverage that you cover.
Thank you again. I started my career on the debt side as a credit analyst and then switched over to the equity side, where I held roles as an analyst and portfolio manager for a couple of mutual funds and hedge funds. I then switched over to the sell side, where I've mostly focused on technology, media, and telecom, generally small and emerging companies, and more recently, in the last few years, expanded to healthcare technology, finally coming up with a reason for why I had one of my majors of biomathematics and what I was ever going to do with it. In terms of my coverage, again, it's primarily small and microcap stocks. When I started on the sell side, I picked up companies I used to own in my fund or wanted to own. I tended to gravitate to stocks that have the following characteristics: what I like to call small cap giants, where they can be leaders in their particular niche, even if they're not such a big company, and can have competitive advantages and barriers to entry. I try to find companies that are underfollowed, where I can potentially add more value. I like recurring revenues and large addressable markets. And then, importantly, I continually relearn the lesson of how important it is to have good management. And this can be identified to a degree by their prior track record, how they feel about capital allocation, and their discipline in running their companies. It is also helpful at times to look at who is invested in the stock and are they people that you respect? I personally tend to have a bias for growth over value, although I do cover both. And ideally, I'm looking for growth at a reasonable price. With small and micro cap stocks, there's often a challenge in finding good fundamental investors. And my experience has been the best way that a company can graduate to being a larger company from micro cap to small cap land is growing very fast. And this can be done both organically and with acquisitions. So that's a little background of myself and what I cover.
Great, thank you. So TMT can mean a lot of things to a lot of people. Are there some subsectors you're focused in right now? Are there any specific verticals or themes that you're supporting? And if so, what's your rationale behind that?
Good question. My universe is somewhat eclectic, but some areas of focus include artificial intelligence, sensors, Internet of Things and smart cities, security and identification, online entertainment, and property and insurance technology. And then within healthcare technology, I focus on AI and software and other technologies that can help doctors and clinics lower costs and raise revenues, improve patients' experiences, and improve health outcomes. For example, I covered a company until recently it got acquired that created all automatically electronic health records from a patient-client visit, which would save a doctor on average 2 to 3 hours a day for having to write up these records manually, and helped alleviate doctor burnout, giving them more time to focus on patient interaction and potentially see more patients. I also cover companies that help doctors, clinics, and hospitals collect revenues and use technology to reduce administrative costs. One theme of some of the companies that I cover is how to be able to identify risks earlier, either through remote patient monitoring or the use of AI.
So technology is having a great run, and it seems like it continues to evolve. What's your thoughts on AI? As you mentioned, it's an area of focus, and how is it making its way into the marketplace? Are there any specific applications within AI that you see are worthwhile to take notice of?
So the best example I know is of a company that I talked to that historically their business model was to target adding a certain number of new salespeople every year. And then us as analysts would be based on that number, we could do the math, make an assumption of how much revenue per salesperson, and come up with how much revenue is going to grow for the next year. Well, for 2024, for the first time, they said, oh, we're not going to add any more salespeople. However, instead, we created an AI solution to help our existing salespeople close deals. And with the use of that, they believe they can grow their revenues at the same rate they had been if they would have hired all those salespersons. So I think that's a very good example. Some other applications that have attractive ROIs is to use AI to replace repetitive or rules-based processes, allowing them to be done at lower costs and faster. So a company that I cover now helps train large language models and does this for 5 of the 7 Magnificent 7 stocks. This company in the last 3 quarters raised their revenue outlook for 2024 from expecting it to be up over 20% to then up over 40% and now up over 60%. And their customers are spending more for larger models with greater accuracy. Within healthcare, valuable applications for AI for companies that I cover include being a co-pilot for doctors to suggest treatments, prepare charts, create electronic health records, and using AI to structure unstructured health records to help identify patients that might be at risk for various diseases. AI can also be used this way to help identify patients that meet a certain characteristic for clinical trials.
Thanks, Alan. Technology's had an amazing effect on a lot of things, but and I appreciate the examples you gave. But what could go wrong? I mean, how should investors mitigate risk when investing in some of these sectors?
So I don't think we have enough time to go into everything that could go wrong or that has gone wrong for stocks I've had. But I have learned, well, one of the things I've learned, if you're not humble in this job, there's probably something wrong with you psychologically. So let's get into some of the things that can go wrong. First, poor management. Does the management have public company experience and a track record of success? Did prior companies that they ran go bankrupt or have legal problems? And do they have experience running a public company? Then companies that go public too early. and not having adequate financial and business experience. Businesses can take longer to execute on a plan than expected, and these companies can have challenges getting financials done in time and challenges to have the resources to adequately forecast their business. Another thing could be a poor competitive position. For example, I've seen presentations of companies that say they operate in a huge total addressable market of e-commerce, but they don't focus on how they're essentially competing with Amazon, and they don't have an effective way to be successful. Acquisitions is another thing, which typically sound great when they're announced, but more often than not, do not add value. In fact, my experience has been that it's more the exception than the rule when an acquisition works out. Another big challenge with smaller companies is the overhang from future potential capital raises. This is, for smaller early stage growth companies is a common issue. And then finally, finding fundamental investors. A lot of these companies have small average daily trading volumes, and they make the mistake of trying too hard to get good institutional investors, where in reality, their stocks probably don't trade enough to get them. And it's probably a better use of time to find good high net worth type of investors. And finally, I would recommend, that investors appreciate the value of diversification, because we all think the stock we have is the greatest thing, but the diversification helps. So that's what I would recommend.
Great, thank you. Are there any up and coming technologies that are still in early stages, in your opinion, that investors should be focused in right now?
I think there's a lot happening with property tech and insurance tech, which are industries that have been around a while, where there's a lot more sophistication in how you manage things to get better outcomes. So those are two areas. Within healthcare, I think remote patient monitoring and chronic care management are going to be big trends, where historically people wait until they have an issue and are sick and go to the doctor. But if you can treat the patients remotely, and catch things early, that can have a huge impact. Well, those are the main things.
Okay. Anything else you'd like to add before we conclude the discussion?
Well, thank you very much for the time. Really appreciate it. I would conclude with that I think small and microcap stocks can provide outsized returns in theory based on lower valuations and faster growth rates overall. Managements can often be more accessible, and the companies can have simpler business models than their large cap brethren. So I think it's a great area for everyone to be focused in. So thank you again.
Great. Thanks, Alan. And if listeners want to reach out to you, how can they contact you?
My email is aklee@maximgrp.com.
Great. Thank you, Alan, for your time today. We greatly appreciate it. This was great, very informative. Everyone out there, please reach out to Alan if you have any questions on the TMT space or healthcare IT. We hope you all enjoy the Lytham Partners Fall 2024 Investor Conference. Have a great day. Thank you.